Hello friends, so this comparison between Google or Alphabet and Meta is one of the most requested ones, so I hope you will like it. These are both huge companies. Alphabet market cap is $2.2 trillion and Meta's market cap is $1.3 trillion. But of course, there are a lot of differences between them. They are not twins, they are not like Adidas and Nike. It's a bit more complicated here. But if you consider investing in tech, then this comparison may come in handy. Okay, so let's see which of those two companies has a better potential as an investment opportunity. Individual insiders own 10.3% of Google and 13.7% of Meta. So when it comes to the management having its skin in the game, Meta is a winner. But it is worth pointing out that in both cases, the management has an exceptional amount of shares. And are individual insiders buying recently? That is an X for Google and also an X for Meta. Individual insiders are not buying any shares of those companies in the recent months. And do super investors own those companies? There are 25 super investors owning Google and 23 super investors owning shares of Meta. So it's a check for Google, and again, the number of super investors in both cases is exceptional. And are they buying? That is an X for Google and for Meta. So the final score when it comes to investors is Google 1 and Meta 1. Okay, so now let's compare the financial health of both companies. Return on invested capital, it is 17.3% for Google and 32.1% for Meta, and they get a check for that. Net profit margin, it is 25.9% for Google and 19.9% for Meta. So this time it's a check for Google. And now let's take a look at share buyback. Google bought back 7.4% of its shares in the last 10 years, and Meta bought back only 1.3% in the same time, so a check for Alphabet. And how many years will it take for each company to pay back its debt? Well, for Google it is 0.2 years and for Meta it is 0.4. So it's another check for Google, though in both cases the debt is very small and it is not a problem for those companies at all. And the final score when it comes to the financial health is 3 points for Google and just 1 point for Meta. Revenue growth, it is 18.7% for Alphabet and 32.9% for Meta, so a clear win for Meta. Free cash flow growth, it is 19.9% for Google and 31.5% for Meta, another check for them. And finally, earnings per share growth, 20% for Google and 37.9% for Meta, so it's a knockout for Meta. 0 points for Google and all 3 points go to the creators of Facebook. Now let's take a look at the dividends. So the dividend yield for Google is 0.5% and for Meta it is 0.1%. So it's a check for Google, but in both cases the yield is very small. And the payout ratio is 10.6% for Google and 1.1% for Meta. So in this case, we prefer a lower payout ratio because it means that the company is keeping more of the cash, which creates bigger possibilities for its future growth. So it's a check for Meta. And lastly, the dividend growth. We don't see any growth in both companies because in both cases they are just starting to pay their first dividends. And it's going to be interesting to see, will they continue to pay them and grow them regardless of the results, and in 25 years they will become dividend aristocrats, or will it be only a short-term experiment? And the final score concerning the dividends is 1 point for Google and 1 point for Meta. And now let's try to compare the valuations of both companies. And to do that, we will use an average intrinsic value per share. When I analyze companies on this channel, I always create 3 scenarios of the possible future, and I end up with 3 different prices. So that is an average of those 3 prices after applying a 30% margin of safety. So the average intrinsic value per share of Google is around $90, and the current share price is closer to $178. So that's an X because the current share price is higher than the average intrinsic value. And when we look at Meta, we see that the average intrinsic value is around $128, and the current share price is $493. So it is also an X. But now let's look at the percentage difference. And for Google, it is minus 49.5%, and for Meta, it is minus 73.9%. So what it means is that Meta is way more overpriced at the current time. So it's a check for Google. It is overpriced, but not as much as Meta. So the final score for the valuation is 1 point for Google and 0 points for Meta. So now let's take a look at the final score. Investors, it is 1 point for Google and 1 point for Meta. Financial health, 3 points for Google and 1 point for Meta. Growth, 0 points for Alphabet and 3 points for Meta. Dividends, 1 point for Google and 1 point for Meta. And valuation, 1 point for Google and 0 points for Meta. So the final score is 6 points for Google and 6 points for Meta. So that is a draw. I think it is actually a first draw in the history of this series. And of course, we have to remember that these results are very simplified, that they do not show the full picture. But hopefully, they can emphasize the strong and weak points of each company. If you would like to compare any companies we analyzed on this channel with each other, now you can do it thanks to our stock ranking and its new features. Just filter the ranking by name or ticker, for example MO, and then add another filter, but this time let's type BTI and change this AND to OR. And now you can see only those 2 companies and you can easily compare them yourself. And if you want to learn more about Alphabet or Meta, then you can watch my analysis of them over here. Thank you so much for watching and see you in the next one.